What's good, yo? So I've been getting a lot of questions about the inside bars. I want to show you what I was looking at on ES. So we had this rally based rally that created this demand here. We retested a couple times, but definitely showed that they had a lot of buyers still in there to push price up. All right, so that's on the 1 hour. Now let's go to the 15 minute. All right, now here's the inside bar. I played today. Right there. So the significance of this is it's kind of the same thing. You see in the rally based rally that created the demand. Well, this is a fresh formation of a demand on the smaller time frame. So it's a drop based rally, which is a reversal pattern, right? So to play this, you see the inside bar. It's going to be the setup bar is going to be red. The inside bar is going to be green. Now it's completely opposite for playing the put side. The setup bar is going to be green, and the small candle, which is the inside bar, is going to be red, right? So what you want to identify on this is um, important levels based on the setup bar. So first, I like to look at the 50%, then the top, which is 100% of that bar, and that's basically showing you, all right, if we hold 50%, we have potential to clear this candle, and the top of the candle shows you if we're gonna clear it or not. And after that, you would look for your nearby resistance or your supplies. As you see, I have a 15-minute demand here. I mean, supply. I would use that as my target, or these wicks. Just anything above that has any significance of turning price around. All right. And for your entry, you enter as soon as it breaks and opens above. As it breaks, because it can come down, it can open, come down, but as long as it comes back above that body, that's when you get in, and your stop loss is below the inside bar, or it's going to be below your wick. And it's all up to you. You can use your zone, you can use the wick or the body. All depends on the. A lot of times, if the size, like the candle was like this big, I would use the body because I want to get as much risk to reward as possible in my favor, right? And to show that risk to reward, let's just say I put it right here in there. This is a Fibonacci tool. It's customized. I'll show you guys real quick. Wrong thing. Right click your Fibonacci, and I have it. One is your stop loss, which is 100%, and zero is your entry. 0% is your entry. And everything above, which is the negative numbers, -1 to all the way to -12, that's your targets. So to draw it, you would go from your stop loss to entry, and it'll project 1 to 1 all the way to 12. And I'll clearly show you the risk to reward. And as you can see clearly that this hit just at four times your money, your risk, which is amazing. If you keep taking those trades and you stop out on 3 of these, you'll still be green because you got 4 times that risk you took. And this is really good for growing small accounts as well. You have this really low risk and really high reward on this setup here. All right. So literally, and then like I was saying, the conviction was hitting this demand, and a lot of times, like, all right, if it already tested it multiple times, it has a chance to break it because those orders they fill, and the more times we test, it may not have those leftover orders there or any interest in that level anymore. So as it tests over and over and over, people may lose value at that current price point, and they want to look at the next point, which is your demand or anything you have below that you've seen significance in, right? So when you don't have that much confidence in buying the dip, wait for the inside bar. That literally shows you, all right, we're absorbing those sellers. We close inside. If we open above, we could test this red candle. and you have clear targets here, 50%, 100% of the candle, and your zone or any level you have above. Simple as that. And there was another one on NQ. Same thing. Inside bar. Let's see. This one almost hit my demand. Of course, maybe there's another level that I didn't grab, but it still shows significance. Let's say I missed this level because it didn't hit my zone and I only wanted to get in if it entered my zone. Well, I have a lot of confidence in playing inside bar, so I would play this one. One second. Put your stop loss and entry, and there you go. Another one that hit, well, this one hit about just a little over 3 times your money right there, 3 times your risk. And of course, tickers that follow the futures, Apple, what did this do? Same exact thing ES did. Hit demand, inside bar, broke above, rallied up, set your Fibonacci. There you go. This one hit almost 3 times. And it's still going. Your target is up here. You're just trailing it on the way up. And the way I look at the trailing is I have my stop loss here, my entry. As long as it doesn't break the level above, the level below that it tested. So like let's say 3 times hit. Well, my stop loss now is 2 times. So let's start from the beginning. We push up to 1 times. What happens? Stop loss goes to break even, right? So in this case, if this thing opened and dropped back down after it hit 1 times, then you would stop out. But if you wasn't like inclined to take profit there, or to stop out, then you'll still be in the trade. It did in fact hold the stop loss here, but a lot of times you'll literally see it just keep going straight up. So it all depends on like how you want to start to trail. Like you can even wait to your 1 times to start trailing. So when this hits 2 times, then boom, stop loss here. It all depends on the market conditions, because of course, if the market is sideways, it's not going to clearly just go straight up. It's going to bounce around. So that's another thing you want to keep in mind, like the momentum, the current market conditions, and that's going to give you a better adaptation to the market on how you would trail and manage that trade. Like if the market's sideways, it pulls down. There's not a lot of momentum in the market, so it's not just going to flush. It can, but based on the market conditions, it's more likely to just hold in range, and the inside bar just gives you that structure to know what you're doing. Enter above the body, hold it. You can take profit at 1 times, 2 times. All depends on your style, your risk to reward tolerance. But literally, that's it. Inside bars. I don't know if I see any. Yesterday they did have one actually. Let me delete that. So yesterday, this thing just blew through everything. But as you can see, inside bar, I did have a supply up here. I deleted it earlier. But this thing hit right around the supply that was in this area. And rally base drop, same thing. Enter below the body. Use 50% as your first target, 100% as your second target. In this case, this thing dropped. What is this? Hold on. Oh, wrong tool here. This thing dropped about almost $4. So if you ask me, I would definitely take profit there. I wouldn't be looking for too much. That was a huge candle. So that just gives a lot of risk reward there. If you can look at your stop loss, you was only risking like 70 cents. So let's pull out that risk reward. Same thing, stop loss to entry. And you got about, where's that? 5 times. That's amazing. That's great risk reward there. Oh, another thing, this thing rallied above the supply, pulled down and held. So that already shows you that you shouldn't be in that trade if it already came down to an area that can potentially test as a demand. But of course, there was definitely buyers in that zone because you could see all the buyers started to come in, but they weren't strong enough to increase price. So it just slowly got absorbed, and as you can see, it just slowly just declined. And of course, look, same thing, broke below, rallied to the top, rejected. So that would actually was a clear sign to short this one. All right, MU. This thing just broke supply and took off. Rally, look, the same thing. Broke above the supply, dropped, and of course, inside bar. Now this inside bar is actually at 50%. Wrong. Wait, no, that's it. This one's at 50%. So your first target would be 100%. And look, we broke that high. Do you see any resistance or anything to the right? No, it's all-time highs. So you would just go based on the ATR of the stock. This thing moves around $3. How much did it move so far? 230. So it might have enough to go about 50 cents to $1. So that's what you would use. All right. Yeah, it's just based on you can even trail it to just take out all that guessing, because there's really no levels to play off of that other than psychological levels. But project your one-to-ones. Here you go. You can even take 2 times, as you know that it's all-time highs. You don't know where it's going, or you can just trail it. Hit 2 times, come back down to 1 time, stop out. You still secure almost all that run you caught. Simple as that. Literally keep it simple. And I'm signing out. Appreciate y'all.